You're watching the Mortgage Busters show, and you know this show is all about paying off your mortgage as fast as possible, but also preparing for retirement. Rain.
Greg.
Great to have you back.
Thank you. Great to be back.
So are people inquiring about the thumbprint report?
Yes, people are indeed inquiring about thumbprint report, and we're getting calls.
Fantastic. So would you like to introduce our first guest, or our guest for this evening?
Absolutely. So our special guest is here to talk about something that we haven't talked about before, have we, Greg?
Absolutely. So we've talked about paying off the mortgage as
Yes.
fast as possible, which
Yes.
we do just about every week.
We do every week.
We talked about property, we've
Yes.
talked about retirement, but we haven't talked about the share market.
Yes, the stock market.
So would you like to introduce David?
Absolutely. So in this episode, we're going to talk about using the stock market to pay off your mortgage faster. And our special guest today is a stock market timer. He's been featured in Sky Business Foxtel, Money Magazine, and the Australian Financial Review calls him the bell ringer. David, welcome to the show.
Thank you.
David, welcome.
Thank you.
So, David, what does the bell ringer mean, and what does the stock market timer do?
Well, a stock market timer is the reason I'm called bell ringer, because
Great.
I've over the past 35 years, I've developed the skills of timing the market when the stock market should be particularly heading towards a high and turning around and going lower, and reaching down onto the low. And the Financial Review called me the bell ringer because in the Financial Review at the end of February in 2009, I said now is the time to buy. And in October 4th, 2011, I said now's the time to buy, when there was another panic on Sky Business. So I have developed that skill. I'm in those areas to work the stock market pretty well within a reasonable degree of accuracy, and also to know when it's not working as well.
Like the global financial crisis?
Yes, the global financial crisis, that was a beautiful time. That was a really, really nice time in the markets because it was working well to my theories. And I'd have forecast the market would top in mid-October for the US and the end of November for, end of October for Australia. And then it would go through a fall. I didn't think it would be as great as that, but I had timed for when the next low should be, and that was really in March. Early March 2009.
Wow.
So how do you put your predictions together? On what basis?
Yeah.
Oh, that's a whole lot of different herbs and spices, and it's a look at past cycles. It's a look at the psychology of the market, the current mania that's going on, when people are all excited about shares, which they were in 2007. Everybody was putting in their money into superannuation because you were given the ability to put $1 million into your super funds, and that was a tax deduction. The government gave that, and that drove the stock market up. It was a euphoria across a whole lot of different stock markets at that time. So it wasn't just the Australian market.
Absolutely. And speaking of the government, you're actually licensed to give advice on the stock market,
Yes,
aren't you?
yeah. I'm licensed under ASIC regulations,
Wonderful.
and corporate others.
So for our viewers that are watching the show now, this show is all about paying off the mortgage as fast as possible, and to have that freedom to enjoy life and not have that leash around the neck.
Yeah.
So what can you do, in terms of advice to give to the viewer? What can they do to enhance their situation and to advance their situation?
Using the stock market.
Yeah, well, using the stock market, well, you're really looking with the stock market, you're really looking at an alternative to being invested in your mortgage. If you've got in your mortgage offset account, if you've got a mortgage, everyone here, do you have a mortgage?
Absolutely.
I loved the day I first killed my first mortgage. That was the best thing. I love that, and it was just a lovely thing. And the way I've found to do it is really to time actually time what your entry into the stock market, as well as make sure you're not having spare money lying around. A lot of people have bits of bank accounts and saving for a rainy day. Put it all into the offset.
Use their offset account.
Yeah,
That's right.
but they can.
That's right.
We tell them to put it in their offsets all the time.
It's fantastic. It's
Absolutely.
like getting a pre-tax 4.5% interest rate bonus. So use an offset account, and then what I do is I look to time the market with bank shares, because you want to try and benefit from when the share prices go up, and step aside when the share prices are going down and benefit from what we call dividends and franking credits.
Right. So can we have an explanation about what dividends and franking credits mean?
Okay, dividends are like the rents that you receive when you have a house which you're invested in and you rent it out. And what happens is there's a beautiful thing that the government does. Because the banks pay tax, the government in your tax gives a tax credit if you own shares and receive a dividend on the bank shares. So it actually grosses up your return, and you pick up a better return than you would if you were paying off the mortgage straight or using a mortgage offset account.
Right. And so dividends, are they only from bank shares, or are they?
No, other shares have. BHP has dividends. New Haven Coal, a whole lot of different companies which are making money have dividend payments, or they can choose to make dividends. It's elected by the company whether they pay dividends or not. If they need to retain money to buy new equipment or fund expansion, then they're looking at, then they may withdraw the dividend. But the banks have been one of the most consistent payers of dividends that we have had in Australia over the past 50, 60 years.
So they pay, it's the equivalent of them paying you rent for owning a part of their company,
Yes,
isn't it?
absolutely.
That's fantastic.
What about mining shares?
Mining shares, same deal. A lot of the mining shares, BHP and Rio, were paying very big dividends because of the mining boom over the last few years. The BHP and Rio have reduced their dividends just recently, just this year, and so the mining stocks do pay dividends. They're not the ones that are the most consistent, because the banks, like it or not, the banks are licensed to steal from us anytime they like. They can just flip on the switch and pick up money off our bank account.
No.
They say, I need a new fee, and whatever they want to do, they've got basically control over their depositors. There's not that many banks around. You can move around a little bit, but they have control. So the banks are they say it's safe as banks. They do have a very low risk profile, and
Right.
their consistency in the way paying dividends has been extraordinary.
That's great. That's fantastic. But I was wondering if we could, when we come back from the break, go into more detail about how the stock market works and what shares are in terms of owning a part of a company,
Absolutely.
so to speak, and give us more detail about that and what you mean by topping and bottoming and highs and lows of the stock market. Is that okay with you?
Yes.
Fantastic. So we'll be back just after the break.
You're watching the Mortgage Busters show, and we're back with David Hunt. David, just a synopsis in terms of how the stock market works. How can you explain the stock market?
Okay, well, let's break it down to what it is. When, for example, if you are if you're going to buy a house and go into shares with somebody else, a number of people, you would be allocated a certain percentage ownership of that house when you buy it.
Do you mean when you buy with other people?
When you buy with other people.
Right.
If you buy with other people, you have shares. And very much like the stock market is the same concept. When you buy into a company, you can buy a share, which is a small portion or an incremental portion of the ownership of that company.
Wow.
And that entitles you to receive dividends if they're available. It gives you the ability to sell that share and buy and sell that share on the stock market at any time you feel like, as long as the stock market's open. And that gives you the comfort of knowing that if the price goes up, you'll be making some money.
Mm-hmm.
If the price goes down, well, the flip side is, like, if your house price goes down, you'll be losing some money on paper. If you sell it on a lower price than you buy it at, you've lost money in reality.
Yes.
So for the average Joe or Joanne, I guess, how does that work? I mean, how do people follow shares?
You can follow shares by looking at Yahoo Finance. You can look at the charts of Yahoo Finance. You can look in any of the major papers.
Can you just
what are charts?
Charts
what are these
are
charts?
pictures of how the share price has been moving.
So it's like
and
a
where
graph.
there's volume. It's a graph.
Yeah,
it's a
going
graph.
up and down.
Yeah. So it gives you
Yeah.
a picture. If you like to hear them, there used to be a thing in the old days called the ticker tape, and you used to be able to hear that ticker tape going tick, 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 if you ever watched the Addams Family, Gomez Addams used to watch the ticket.
Gomez Adams. And he made a fortune, didn't he? Or three.
Was he trading in the stock market?
He was trading in the
Oh,
stock market.
fantastic! Yeah.
That's probably not beyond your time.
Hey, I love the Addams Family.
She's got the hair.
Yeah, I got the hair. So the stock market, it's just basically a place where people go to buy and sell a piece of a company,
Yeah.
isn't it?
In the hope of making some money into the future.
Wow! And you actually do people actually realize they actually own a portion of the company every time they buy shares?
I don't think so. Some people don't care. It's a vehicle for making some money. Really, if business is good, you get some rewards.
So
True.
can you actually give us more than just hope?
In terms of hope,
Yeah.
yes, certainly. When you invest in blue chip shares, when the term blue chip came from the poker in the
Well, that gives me a lot of
1900s,
Poker gains, they were huge.
it
Yes.
transferred to the Dow Jones top 30 stocks. In fact, it was the top 20 stocks originally, but the top 30 stocks in the Dow in the US, the biggest industrial engine of that time,
Right.
they were termed blue chip stocks because they were ones that really had more potential and also appeared to have less risk in the minds of the investors.
So when you say Dow Jones, is that some kind of index where they put stocks on?
Yes, they aggregate stocks together and they say, okay, the Dow Jones index, these basket of 30 stocks went up 300 points today, or it went down 20 points, and that gives us a barometer of what the overall market has done.
It's a lot of stocks, isn't it? It's not really a lot of stocks
Yes,
in terms of the Dow Jones.
There are different indexes in the
right.
US, which there's the S&P 500, which has got 500 shares,
Wow.
or the Dow, or the Russell index, which is 2,000 shares.
But these are the
Yes.
best shares. Are they all blue chip shares? I mean, safer to buy
Yeah,
shares?
it takes a big effort for a company's stock to go into the Dow. It requires a lot
Wow.
of box ticking and
Right.
takes many years.
And they have to give some really steady returns to investors. They have to be less risk, so safer to buy like banks.
Yes, they have to be ones where people will really have more comfort and more security in them. Good businesses, well run, and hopefully, as long as the economy goes well, these stocks do well as well.
So if the economy goes well, the government actually helps you by giving you tax preferred credits when to buy and sell stocks. So
Yes.
so you can actually make an income, additional income, buying and selling these stocks in the stock market, and the government will reward you for it.
Yes, this is because
Wow.
the stocks that pay dividend often pay enough tax to pay franking credits. And there's a term called fully franked credits, which means they give you 100% credit for the tax that they've paid. And the government, a gentleman called Frank, maybe sits there in the office and franks the credit.
In the tax office going, yes, you
Tax
can
office,
have your,
yes, you can
your,
have,
your
yes,
tax
you can
back.
have that.
Yeah.
You get the tax, and when you pay your tax, the accountant calculates it up and says, oh, you've received $2,000 worth of dividends at 30% franking rate. So the effective amount that you receive, you get a tax credit on your of $600.
Wow.
And then so your effective return is more like $2,600 for those dividends.
That's fantastic, and that's why some people can use the stock market to buy and sell it and make money to pay off their mortgage?
Yes, that's right.
So how does the average person watching this show, for instance, get involved in the stock market? Someone that just hasn't been involved
Yes.
before, but they just want to get interested and get going.
Firstly,
Yes.
you really need to have some education and
Absolutely.
understand what you're actually doing.
So you can
Secondly,
help us with this?
I help with that.
Absolutely.
I advise professional financial advisors and professional investors and traders in the markets.
Isn't your group
That's what I
called
do,
the
as well
Profit
as-
Hunters?
It's called the Profit Hunters. Yes.
Fantastic. Isn't that a great name?
Yes, it's
Yes.
fantastic. It was created from a Financial Review journalist. He said, I've got a good name for the people that you manage. It's called, you advise. It's called the Profit Hunters, and it's a play on my name. It took me a little while to work that out, but
As in David Hunt.
Yes, in David Hunt. But you also do a thing called the Australian Shares Report, where you actually talk about what is best to go into and get out of. Is that correct?
And where they could go to and how to manage those shares once you get into them. Yes,
fantastic, because you do call the market in terms of when it's, what did you say, topping and bottoming? When it's the highest and when it's the lowest. Is that correct?
Yes. So when a market is bottoming, I want to be buying. It's B for bottoming.
Yeah.
And when the market's topping, you step back a little bit and you start selling. So you go back to S from T. So topping,
how do you
I want
know?
to get out of the market.
I mean, obviously you do research and fundamental, research and stuff, but how do you...
I'm always putting my finger on the pulse of the market day in, day out. I'm watching the US markets, I'm watching the Australian markets, and I'm watching how people are responding.
Yeah. Wow.
Can you give us a bit more detail in terms of how you do that?
For example, I look for, I'm a chartist, and so as well as an economist. So what I do is I look at the patterns that the market is throwing and performing. And there are certain patterns that I look for when a market is topping, and certain patterns I look at when a market is bottoming. And I also look at what the general psychology of the market is, and I see how long the trends run for and what time it is, because believe it or not, there is a stock market clock, and it does loosely work in cycles.
I'm so sorry, David. That's fascinating what you're saying, but we have to go to break. So we'll be back shortly after the break.
We're back with the Mortgage Busters show, and we're speaking to David Hunt. David, so timing is everything when it comes to the market?
Timing is the easiest, most simplest way to enjoy the stock market.
I'm sure it is for you.
Because
is it really that easy?
Yes, because there's a group of people called stock pickers, and they spend all these times reading balance sheets and looking at the entrails and opening up chickens and stuff, and talking to the company in particular shares, and they're called analysts, and often there are company analysts that are devoted to 3 or 4 industries at most, maybe even 3 or 4 shares. And they spend all of their time looking at shares, the entrails of these companies. I find it's better, and studies have shown that there's about a 17% benefit that you have by timing the market rather than spending all your time looking at the individual shares. There's a certain times where the stock market is set for rally.
How did you come to 17%?
That was a study done. I'm not sure the actual place that it was, but there's a study done that timing the market gives you a better return. And I know it's easier because I do it for my customers year in, year out. So
and yourself.
Yeah, and I don't look at company balance sheets and things like that. I like fundamentals and company to be fundamentally good, and I can certainly pick that up from somewhere else, but it's actually timing the market that I've found to be much more effective.
So there are 2 factions, aren't there? There's chartists,
yes,
as far as I know anyway, and there's fundamentalists.
Yes.
So just a quick description on both.
A fundamentalist believes that they will buy the shares based on their analysis of the markets, of the individual shares and the business. So they see whether the business is good. And fundamentalists tend to buy at any price. If they come across a stock that is they call it story, and the story is good, they will buy it. And I'm a little bit more stingier than that. I like to buy it really when it's reached a low point. Like, for example, I bought BHP down underneath $15 back in February, and then I sold it out back up at $21, at $20.89 to be precise. Right. On the April 21st, exactly when the market time was. On the 21st of January, I was saying this is a buy on BHP, and come April, I was saying it was a sell. So those are the things. The fundamentals hadn't changed for the business. In fact, it had probably gotten a bit worse because they cut their dividends. So the fundamentalists didn't pick up that big run of some $5.
But can you actually be both?
You can be both, yes, and there are certainly. I like to look at good businesses, and I'll always work at good businesses. But I also work for time in the market as well. So
Yes.
when the BHP shares that I bought, I've sold out of half of them. I'm keeping the other half. They're now today at $19.50, and I've so it's a time in the market helps, and I want to buy the right share at the right time and hold it forever, just as a fundamentalist would do.
Really, it
So
goes
I
with,
use charting to pick up cheaper prices. than
Oh, right. So you
fundamentalists do.
combine the best
I
of
combine,
both
yeah.
worlds in order to get the low of the stock and the top of the stock,
Yes.
and the low of the stock market and the top of the stock market. So that's what you call bottoming and topping, isn't
Yeah.
it?
Picking bottoms and picking tops.
And you can do
Okay.
that the same with stocks as you would do with the stock market.
Yes.
When it's the low and when it's the high point, of course. To make money, you have to buy low and sell high.
That's right. Well, technically, you have to buy low and sell higher.
Higher, it's true, it's true.
Because the trend may evolve.
That helps.
Yeah.
A trend is an important part of the work that I do.
Absolutely, and that's why on these charts you always see things going like this and all over the shop, don't
Yes.
they?
And
So
so
in terms
I
of-
determine what trend it
In
is.
terms of trend analysis, what do you use any indicators and
Yes,
things like that?
yes, I do. I use a simple thing which all of you can use is a thing called a moving average, and I take a 5-period moving average, I take a 15-period moving average, and I take a 30-period moving average. And I won't tell you how much I made using those moving averages in currencies, but they're very, very effective in a trend.
And time
Highly
frame?
effective trend.
Time frame? Over what time frame? Like if you're doing, you mentioned moving averages.
yes.
But over what time frame?
Oh, a 5-period moving average can be over the daily chart. It can be over the weekly chart if you want a longer term, intermediate time frame. If you want a longer term time frame, you're looking at 30 days or 30 weeks or 30 months.
Right,
on
and a
average.
moving average, is it just the average price of a stock?
The average
or
price of the closing price of the stock.
of the
yes.
closing, right.
Yes.
And what would you recommend in terms of timing the market to get this 17% that you were talking about, and what to do for our
Okay.
viewers?
The first thing is, what I do is I use some algorithms, I do some number crunching, and I come up with the cycles, and I look back at what has happened in the past. And then I look forward to what might happen for this year. So every year I do a forecast as to when a market could be strong or not. And at the moment, we're moving into the time where the market may be a little bit weaker for a little time, but around mid-July we should start to see the buying come into the stock market. It should get stronger after early August and then head up into mid-September. And so this is perfect timing for people who are in that phase of their lives where either they're trying to buy shares to save for a deposit on their houses,
Yes.
or they're trying to look for retirement, or they're looking for a better return than just simply paying down the mortgage and offset and pick up some dividends. So and we can take some investments, get some capital growth, get some dividends at this time of the year. It's one of the it's got around about a 70% chance of working. So it's
That's
quite,
pretty good
it's
odds.
quite,
That
it's
is
pretty
a
good
great
odds.
odds. Those are
Yes.
fantastic
That
odds.
time of year is generally about 70% that the market rallies and rises, and we can pick up dividends at that time.
Absolutely, and the way of picking up dividends is buying blue chip stocks, which are
Yes.
less risky and safer.
Yeah, they're
Are
businesses
they,
that
are
are
they less risky?
well. Risk is a relative term. Less volatile is probably the words.
Oh, yeah.
Their businesses
Okay.
are
Yeah.
solid businesses which are
Yes.
well reported. They're well regulated. They've got good corporate governance. They're not going to just disappear with some person puts all of the documents and all the money in the back of a truck and takes them off. It's very hard to do with BHP or Westpac or a Commonwealth Bank. So those are the stocks that we rely on more to be there in 6 months' time or a year's time when we want to sell out.
David, we're coming to the close
Wow.
of the show this afternoon,
Okay.
or this evening. We're going to be seeing you again next week.
Yes.
So with more information and more highlights about the stock market and how to actually pay off your mortgage at a faster rate of knots.
And
And
beat the banks.
And beat the
at their
banks
own
at their
game.
own game. You're
Beats
going
the
to
banks.
unveil.
I love that phrase.
Absolutely,
We're going to use the bank's money. to
Yeah,
beat them.
absolutely. And we're going to unveil your
Pay off your
special mortgage busting formula. aren't
So
we?
let's get
Yep.
excited about next week.
Absolutely.
Yes.
Absolutely. Thank you for coming.
Thank you. Thank you for having
Thanks
me.
for being with us.
Thank you.
Yes,
Thanks,
thank
Dave.
you.
Thank you.
And
Right.
yes, great.
The thumbprint report.
Yes, the thumbprint report. The free thumbprint report is available to all our viewers. All you have to do is call us on 1300-862-746, and that number again
is
1300-862-746.
So you've been watching the Mortgage Busters show. We'll see you again next week.